Hey, welcome back to the Evolution Real Estate Podcast, where you're staying up with the ever-changing modern real estate market. For those who maybe are joining us for the first time, this is Scott and my podcast where we go through kind of everyday topics. And then we also talk about certain scheduled content that might be good to know, whether you're a realtor, a lender, a first-time home buyer, a move-up buyer, anything like that. Anything relevant to real estate is our topics that we cover. So, and we do this in a weekly fashion. You can find it on YouTube. That's kind of our main channel. But you can also find it on any of the podcast apps, Stitcher, Apple Podcasts, Google Podcasts, anything like that. So, Scott, do just a quick introduction if someone's here that's meeting you for the first time.
Hey, Justus. My name is Scott Ebel. I'm with Greater Midwest Realty and super excited to be here today. I think we got some great content that we want to share with everyone about kind of where it's at and what it really takes to get ready to make an offer. So that's one of the topics we're going to touch on today. So pretty excited about that. A little bit about myself. As you can see in the background, I'm with Greater Midwest Realty and also a veteran of the United States Army. Served for 33 and a half years. And yesterday, obviously, was a pretty special day for many, many people. So, and myself included. So, super excited to be here. Super excited to share some things. So, that being said, we can get started.
Yeah, perfect. And Scott, yeah, thank you for your service and to all veterans out there. My name is Justus. I am a mortgage loan officer. So if you're a first-time home buyer, I'm the guy who helps you get the loan to buy the house. Before I became a loan officer, I was a licensed therapist and school counselor, and I taught community college psychology courses. So educating is a big thing of what I do, and that's one of the reasons Scott and I are doing this podcast. So again, kind of the way we break it down is we go through kind of some interesting topics that happened in the past week or something that we wanted to talk about before we get to our scheduled content. So Scott, for this week, what's something interesting that you wanted to bring to the table?
Thanks, Justus. When you're talking about making an offer, especially in today's market, what I really wanted to cover today was some housing stats and kind of look at closed sales, what's currently on the market, and months of supply. Those are pretty good indicators of where we're at in the market. So I'm going to go ahead and share my screen here and let me know once you can see it. Hopefully you can see it now.
There we go. And I'll minimize us. Okay,
super. So what this is a database that we use via the NMLS, and it's InfoSparks. It's a great tool to really take a look at the market in a whole. What I've got pulled up right now is the 7-county metro area in Minneapolis, Twin Cities. And so what this graph depicts is it's a 3-year depiction and kind of broken down by 12 months. But if I move my cursor over October, as of the stats are as of last month, total closed sales, we've had 56,013 closed sales to year. So if you kind of look at, I want to share, as we look back on this, and you look a year ago, we had 52,491 closed sales. So you kind of see what the graph is doing and where we're at. So we've had a closed sale increase, which is pretty incredible. And I think it directly relates to more people with the pandemic, people really wanting to get a new home, get reestablished, work, and just really get reestablished. But so that's kind of where that is. But it's interesting to look at the graph and see in October of 19, look at this number of sales in the 7 metro county area in Minneapolis, St. Paul, 50,089. So you can see the difference in amount of closed sales that we've had in just the last 3 years. Currently, I want to move on to look at currently what's going on with the market and what's for sale. Currently on the market in October is 5,598. So if we once again follow those trends and go back to October of 2020, look at how many homes were for sale then, 7,703. So
wow.
Yeah, there's quite a big difference there. And then even if we go back to October of 19, We've got 8,797 in the 7-county metro area. So as you can see, this graph does a real good job of depicting what our inventory is and really what's for sale. So you can see how much it's changed in the last couple of years alone. I'll move back to October of 18. Was pretty close to what it was in 19. And then it kind of peaked here in June, and then kind of went back down. So, but as you can see right now, look at the number of homes that are on the market. It's just 5,598. Another real good indicator of what's going on in the market that we use is what's called months of supply. And I'll switch over and share that graph. But as you can see, Justus, looking at October, and I've been doing this for quite a while, about 25 years. And as you start to study these graphs and look at them and track, it really is an indicator of what's not only happened, but what will happen in the future. Or you can kind of somewhat follow the trends, right? But if you look in October of this year, we've got 1.2 months of supply. And the reason why I want to really show this is that's the importance of really, when you get started, when you're out there getting ready to make an offer and kind of put together, find your next home, whether it be your primary home, investment, what have you, you definitely want to, do the necessary steps to get ready. So obviously, we'll talk about pre-approval, pre-qualified, pre-approved, that Justus, I think you'll cover. But, when you look at these numbers, that's the importance of, why some of those things and that we're going to need to do when you get ready to make an offer. In the past, and then kind of going back to the stats, if we go back even a year to October of 2020, look at the inventory there. It's 1.8. So, I mean,
and isn't that considered super low anyway? 1.8?
It is.
Yeah, so we're lower.
Across the country, and what the kind of a watermark or a barometer is of 5 to 6 months of supply is what's considered to be an equal housing market, where it's not an advantage to the buyer or the seller. It's kind of equal. So that gives you some idea of the sense of urgency for a buyer to really be prepared with only, currently 1.2 months of supply, but even a year ago, it was 1.8, and then as you can see on these graphs, May of 2020 is where as you can see, it started stair stepping and has dropped ever since. So it'll be interesting to see where we're at and where we're going to go in the future. But hopefully that months of supply will definitely start to come up. So
yeah, and that drop off coincides with COVID rates plummeting, down in the 2s and whatnot. So yeah, it'll be now that rates are starting to climb back up. It'll be interesting to see if this number goes the other way.
Right. One other, one thing on the list side for sellers. Here's the other thing. A lot of people, percentage of list price. I want to share this real quick. This graph, and it'll come up here. But it kind of shows what. So as you can see, as we've gone on here, it was pretty steady all the way from 2018 until right here, July of 2020. And that's where the stair step effectively started going the other way, as far as what a seller would realize from their listing. So 100%, right? And then it just kind of climbs from there, and small percentages. But today, in the 7 metro county area, 102.5%. So when, you hear these stories of the summer's been kind of notorious for this. And I think throughout the whole country, when the lack of inventory that we just saw, months of supply, down to 1.2, and a lot of areas, it's even less. But that directly relates to the amount that the sellers are going to net, right? In reverse. So that's what this graph really kind of shows and depicts. So it's a pretty interesting story, but we'll see where we end up moving forward.
Yeah. Wow. That's crazy. Yeah. So if it's at 102.5% right now in October, that essentially means most homes are going over ask price. Is that correct?
Absolutely, they are. And this summer, it was just absolutely incredible. Some of the things that I've never seen before, and I think a lot of people have heard about this, but or if you've been in the market and you kind of were a part of this summer's activity, buying activity, is that a lot of buyers were even waiving their home inspection and some of the contingencies that normally be allowed and afforded a buyer. That became kind of almost an option or something that people chose to do, which I've never seen before in the past. So we are starting to get back a little bit after September now, where people are able to add that back in as far as a contingency, the home inspection and what have you, and have some more things to bargain or negotiate with. But it's amazing. I've never seen that in my career. And I don't know too many other people that have also, where buyers felt that they needed to do everything possible to be able to get their offer accepted. And that one of which was removing home inspections and just buying it as is. I mean, most of the time it's investors who do that, right? To get a better deal, and yeah, I'll take it the way it is. And for the traditional market, that's just not normal, not normal. But that is what we saw. But it is starting to kind of go away, so that's a good thing. So, Justus, I know you want to talk about the importance and kind of the steps of what it takes to get pre-approved and pre-qualified, the difference. So why don't I'll stop sharing my screen here, give it back to you, and go ahead and I think you want to talk about some of those things.
Yeah. So part of our scheduled content today is kind of that first half of the new buyer client experience all the way to making an offer on a home. But my interesting topic is something that came up this week when I was asked to give a generic pre-approval so clients could go out. The realtor actually asked me for that, and to have the clients go out and just look at properties. Now that's at every LO's choice, but I personally don't like to do that. I think there's important reasons not to do that. One of the main reasons would be it allows me to always check the property to make sure it works for the buyer, especially if we have tight numbers. And that way we don't get into an oh no situation. And then the other reason would be something that you could touch on as well, but it allows the list agent to know that as a loan officer, I specifically looked at that specific property, made sure it worked, and then did a pre-approval on that property. It's not just some generic thing that was thrown together or tossed out there. So with that, when we give an offer to a list agent, I also like to do either I call and talk to the list agent about our buyer and our situation, or I do like a little video that gets attached to the offer that essentially does the same thing, but it kind of just skips the step of having to make that call. So then the list agent and then the sellers in that case can get it straight from the lender, like, hey, qualified, we've already done the work. So those are kind of two reasons why I would not do a generic pre-approval. And what are your thoughts on that when you're a list agent and you're getting pre-approval, pre-approvals coming in?
I think it really does matter. And I think you said one really interesting point as far as when you say a specific pre-approval for a specific home, right, or specific property. What I mean by that, I mean, obviously, when you're running those numbers or really looking at it, they're not all the same. And I think one of the things that's most important that you're looking at, not only the purchase price, right? You base that and you calculate out your numbers as far as loan to value, what they're borrowing and interest rate and what have you. But every property is different in a way that property taxes, insurance, flood insurance, could they be in a flood zone, other different types of different insurance policies, right? So I think those are the things you're talking about too. Really taking a look specifically about that property, because it does matter, right? Because payments can, adjust quite a bit because of that, right?
Yeah. And then obviously knowing what we just talked about with the low inventory, even if you get into a home and then you, oh no, can't get it because you weren't specifically pre-approved for it, that's a problem, because you don't have a whole lot of shots at the homes with the limited inventory. So you want to make sure that you're fully vested and 100% accurate with that pre-approval. Right.
Yeah, that's no doubt. And some people, and you probably know this better than I, and I've seen it quite a bit, but some people, they're almost to the point with trying to qualify for or purchase and or qualify for as much as they can, it really does matter on the taxes and insurance on how much
Yeah.
they
Oh
pay,
yeah.
right?
Yeah. Yeah.
Though you find that quite often that too, it's PITI, principal, interest, taxes, and insurance. And when you calculate that out, I mean, there's, in your opinion, I guess how much does it vary? It varies quite a bit sometimes.
It sure can. And it really comes into play when you have clients that are really pushing their debt to income limits.
Sure,
And,
sure.
so then it gets really dicey because they might qualify for a house for the same price in one neighborhood and not qualify in another because the taxes are higher.
Sure.
Or association dues, anyone looking at townhomes or condos, association dues are all over the place. So that can make or break someone's qualifying as well.
Yeah, that's huge. I think that's a key point to touch on too, depending on if you're looking at a single family home or you're looking at a associated living type situation where you have to pay those association fees, and they do vary quite a bit, by hundreds a month, and that's a big deal for people when they're qualifying and getting ready to make an offer.
Yeah, for sure.
Yeah.
So, obviously with that, let's get into our scheduled content. So this is the new buyer experience or the new buyer process. And we're specifically talking about the buy side here. So Scott, maybe you start with this because, back in the day, it used to be, let's go to the bank, figure out what I can, be approved for, and then go find a realtor and find a house. But, HGTV took over, and you can, now you can search online, and we're not going to name the big boys, or you can search, but you can search for homes online without the help of any professional. Maybe you can take over on what it looks like now today.
Yeah, it definitely has changed over the years. There's no question about it. Anybody that's been doing this for a number of years have seen, I don't want to date myself too much, going back to the days of dial-up when I first started. That was quite fun. And even talking about almost like Pavlov's dog, or when the UPS delivery person would show up at our office and they would bring MLS books. All right. So yeah, no, I'm dating myself now, and all of us agents would run up and scurry up from our offices and grab a book and disseminate and go out to our own offices and start circling and finding properties. Well, it's, as everybody knows, it's not that way anymore. It's so advanced. It's come so far. It's kind of funny to talk about that, and it's a great memory. But even back then, we used to contracts, and you talk about just the sheer development of this industry. Contracts used to be 4 pages, and it was carbon copy, press hard, right? And,
wow, yeah.
To be able to get an offer, and it was. And fax machines and some of the other things, but talking about that, I digress. Today, obviously people start online. There's so many great ways to find information, and it really is. There's some value, there's some great value. And it's come a long way. So, but really talking about that, yes, you do have more access, much more access to information. And it is, for the most part, pretty accurate, pretty current. I will say that depending on the different feeds and where the information comes from and how often they pull, not all sales are on the MLS. I think I read a statistic not too long ago, but that about 89 to 92% of sales are on the MLS. Now there's a percentage that isn't. So meaning off sales, but off MLS or what have you. But most of the time, realtors are going to be involved. And it does start with the MLS. And so I guess the best way to go about it is really, get your team together and find out who's going to help you with this process. If you really want to go it alone, if it's worth it, if that's the best way you want to go, and really the pros and cons of it. But from there, really getting your team put together. Who is your loan officer like yourself? I mean, it's vitally important to know, before you go out shopping, you really want to know what those payments are. What can you afford, and what do you want to spend? That's critical. So, and then other key players of your team are obviously a realtor, and we're talking about the buy side here. Finding somebody that you have a great working relationship or good communication and think it'll be a good fit. That's vitally important because, most realtors are very professional, and they're going to be with you from start to end, start to finish. They got to, it's a performance oriented business where us as real estate agents, or in my case, a real estate broker, we have to get you over the goal line, right? We have to get you there to not only get you the home, but also that's when we earn our fee for service. So it's all truly really about helping you and getting you a home that you're looking for and that you want. But online is definitely a presence. It's a great way, to start looking and get some ideas, but you really got to know, it's kind of like being an archer and being blind, right? And the best archer in the world, if he's blindfolded, most people could beat them 100 times out of 100 if they can't see what they're looking for. So that's kind of what I'm talking about there, is that the importance of really knowing what you can afford, what you want to pay, areas, and then you kind of go from there as far as areas that you want to live and different pros and cons of areas that you want to, schools and many different things. So, yeah. So hopefully that helps people as far as the working down the order of how do you, what's important? Where do I start? How do I get ready, right? To make an offer.
Yeah.
So I don't know if that helps, but.
Yeah. And so, with that order, if a client, let's say they do start with a lender, well, the first things that specifically I do, and you can actually skip this step if you were like, hey, I want to try and find a house this weekend. But assuming that you're just kind of dipping your toes in the water or something like that, because most people are afraid of having their credit pulled. That's the biggest thing anytime in my world, that if I talk to a client for the first time home buyers are petrified of having their credit pulled, because it's a hard pull. It affects it, it shows on their score, that's, and all that kind of stuff. But what you start out with is actually what's called a pre-qualification. And so you think of that as one thing you could call it is like an unofficial pre-approval. So what you do is you have a 30-minute phone call or a Zoom with a loan officer like myself, and you go through what you make, how you make it, how long you've been at your job, what you do, what assets you have saved up for, if you need down payment assistance. And you're essentially going through all the steps you would if you're pre-approved. It's just you're talking through the numbers and you're not providing documentation. So that at least can get you an idea of where you're at, or maybe where you need to go or what you need to work on. And so part of a job of a loan officer is in that conversation. If you're not to the point of where you need to be or want to be to buy a house, then part of my job is to help get you there. So I can be a credit coach or a financial coach and help you get along the steps. So 6 months from now, you're ready to buy and you come back, and then we do the actual pre-approval. So pre-qualification is essentially just working through that stuff. Obviously there's no cost or anything. It's just part of the job. So my job as a loan officer is to be a coach and a resource. And then from there, let's just say the pre-qualification, everything lines up and you're like, okay, I'm ready to move to what's the next step? So the next step after that would be to apply for the loan. And that is the first step towards pre-approval. So when you apply, you're putting in your name, your social, all the information we talked about in that pre-qualification, but you are essentially putting it down on paper in an application. So that way your credit can get pulled, and then everything can kind of officially start so you can work towards that pre-approval. Now with that, you're sending in documentation. So with a pre-approval, you're sending in, your last 2 years of W-2. So in this case, when we're recording it, we're recording this in 2021. So you would be sending in your 2020 and your 2019 W-2s. This would be for any job that you worked. If you're self-employed, I'll touch on that later, but assuming you're a W-2 employee. So 2020 and 2019 W-2s. Then you send in your first or your most recent 2 pay stubs. So then that can help figure out that, the W-2 pay adds up, and you might end up sending additional pay stubs if you get like bonus or overtime at your job. So then, you get the last pay stub for 2020, last pay stub for 2019, because then those would show the most amount of overtime that you had for those years or bonus. And then that can help, use towards qualified income down the road. Let's see. And with that, I also ask for your HR contact so we can get a verified employment from them. And then, 2 months bank statements. And sometimes we can get away with one, depending on what program or situation we're using, but typically we'll always ask for 2 months. And what we're looking on there is the loan officer's job is to make sure you're qualified for the loan. So we're kind of like a detective in pre-underwriter. So we're like, hey, do you have any large deposits? Where did this money come from? Make sure it all looks good. If you're self-employed, we need a few more things. And self-employment guidelines seem to change. They definitely changed when COVID hit because it got a lot more strict. But at the moment, we need 2 years of tax returns, business and personal, and then 3 months of business bank statements, as well as your current year's profit and loss statement. And the reason that is because they want to see the money in and out. They want to see the flow of the business, make sure your current year matches your taxes from years before. And then one thing to note is if you are self-employed and you do write-offs, those write-offs take away from your qualified income for qualifying for a house. So be careful on what you write off in your taxes, because that can directly affect how much you can actually qualify for. And then if you have, let's just say your 2020 tax return was a little less than your 2019 tax return. If that's the case, then we typically only use the current 2020 lower amount. If we can use 2020 and 2019, where 2020 is slightly higher than 2019, then we take an average of the two. So just kind of, there's obviously a lot of little steps there, but at that point, then let's say that all makes sense. We figured out what loan program you need. If you need down payment assistance, make sure you fit into that, all that kind of stuff. Then I don't give out a pre-approval letter, but I give out a pre-approval email to you and your agent, such as Scott here. And then that will allow the agent and you to know kind of the general, like, hey, here's our price guideline, here's our payment ceiling, here's the programs we're going to be using, here's kind of like the thought on what we're doing. And so at that point, Scott would take over and say, okay, we're pre-approved, let's go find you a house. So what does that, after a lender hands off that, hey, you're pre-approved, what does that look like on your end?
You know, that's a great point, and I'm glad you went through detail of that, because the importance of type of loan program that you qualify for does directly matter to the types of homes that are being offered. So out on the MLS, or whenever somebody offers a home for sale on the MLS or out on the market, basically there's different types of financing that the seller will accept upon receiving an offer. So some homes, for instance, are not offered FHA, and it could be because of condition, repairs that are needed, what have you. So there's definitely, that's just another valuable point, or to know what type of financing in fact that you do qualify for. And oftenly, Justus, isn't what determines, like, and I just want to touch on this, FHA and VA, which in the past I've done a lot and hope to do many more, help veterans use their benefits and be able to buy utilizing the Veteran Administration's home loan program, VA, but also FHA. You know, there's certain things within their guidelines that FHA, you know, is it driven by score? Is it monies? Just real quick, and then I'll talk more about an offer and
yeah,
being able to get out there and make an offer. So
yeah, right now, again, a lot of guidelines tightened after COVID hit.
Okay.
Because people were losing their jobs and a lot of stuff changes. Even our automated underwriting system, which I'm sure we'll talk about at some point, that got tighter. So everything just got a little bit more tight in the sense of qualifying. So right now, typically, now this, again, every case is different, but typically
Sure.
if you're below 700 and you're a first-time home buyer, so you're doing, you know, minimum down kind of thing, you're usually doing FHA. And okay. FHA, you know, it's mostly determined by credit score. FHA has, you know, a little bit stricter guidelines on how income's used or how things are looked at. They have a slightly different appraisal. You have to do a minimum of 3.5% down. And then there's also mortgage insurance on for the life of the loan, as well as an upfront funding fee, which is a 1.75% of the loan amount that gets tacked onto the backside of the loan when you close. So if we can avoid FHA, we do, but the beauty of FHA is it allows you to get into a home where you otherwise wouldn't maybe be able to. So there is obviously still a place for it. For VA, it all depends on, you know, that letter that says like how much they can use, or that they can use VA benefits. And then that allows them to get in, you know, 0% down. And they, you know, if they're exempt from that funding fee, then they don't have to pay that. If they have to pay that funding fee, which those percentages just changed this year as well, that all kind of gets worked out in that pre-approval stage.
Oh, that's awesome. I think that'll be a great topic in the future to talk about those different
Mhm.
programs for what people might be eligible for and the different type of financing, because it really does matter. And the reason why I want to segue or kind of talk about that a little bit is because it is so important, especially with a competitive market out there. What we are seeing now, there is no 100% rule, but generally, if you look at, say, being on the helping a seller or the list side, sellers in an order of type of financing that they're going to want to most likely accept, or which is considered maybe better than the other, is conventional first and foremost, because of some of the things that go along with that. Is a lot of people worry about the appraiser and maybe calling out work orders and some of the other things. So it really comes to that. But and I think we definitely want to dig into that deeper as far as the different programs, maybe guidelines, what that looks like, the different types of offers. But this summer, really it's and it really elevated or boiled to the top was cash offers. What a lot of people were doing is doing some cash offers to be able to eliminate, once again, as many contingencies as possible, right? Whether it be the home inspection, but that's not the case. But underwriting process, which there's a period of somewhat, I guess, for lack of better term, interrogation, or they look into things, right? But so I think making an offer, if people are able to do that cash, and then a lot of times what people will do is turn around and then refinance or put a mortgage on it after they secure the property. So they may come back to a lender like yourself and refinance or pull cash out or do a cash refi, may be an option. But we did see a lot of cash offers this year. But then after that, it was conventional. And then once again, it's been over list price, as we showed earlier, and some crazy numbers. I mean, that's a whole nother topic also that we could probably dig into and spend a lot of time on just sharing what that looked like as far as how much over and what people were paying and some of the things. So it'll be interesting to see in the future where that brings us. But some of the other, that's really the importance, is what type of financing you're using really matters. Earnest money is basically money put down to secure the deal. So depending on how much you want to put forth, now you do get that back as long as you move forward and you don't back out and some of those other things. But and then obviously, when do you want to close? How quickly can you close? Those are all important things. Do you have another home to sell? That once again is another contingency that a lot of homeowners were not willing to. Not all, you can never say all, but a lot of homeowners would like to be able to just sell their home and move on, right? Because it can become a progressional thing, whereas they're going to sell their home, they need to get into their next home. And so those contingencies, or those hurdles, if you would, need to be removed as soon and as quickly as possible, so that we know the probability to get to closing, so everybody can keep moving forward and move forward with the purchase. So but it is absolutely the summer, as you know too. The summer has been crazy with offers and trying to get them to get offers accepted. So I think we talked about earnest money, waiving inspections. Now that's, I don't know that I'd advise that, but it became almost an option for buyers that they felt like they needed to do it to compete. And I think we're starting to see some of that go away now. Offer price is pretty much at list and over. So it's kind of what's going on with the market right now. So it's a crazy time. So it'll be interesting to see in the future what else we have to share So
speaking of earnest money, I get this question a lot from first-time home buyers, and maybe you can explain it. What's the importance of earnest money? Why is there earnest money? And, why is it called a good faith deposit?
Well, it just shows that, right? It's good faith that you're going to move forward. It's kind of what's normally referred to as skin in the game. right? Because if somebody's doesn't have anything to lose or anything put forth, well, it's easy for them just to walk away, right? It traditionally is known, it's consideration, right? So whenever you enter into a purchase agreement or offer to purchase, there needs to be some form of consideration, and that's what earnest money does and is a way that showing the seller that yes, you are earnest in your efforts, and that you effectively want to move forward. So not always, but so there are times when buyers have lost their earnest money, when you basically, in a nutshell, when you can lose your earnest money is, or I've seen earnest money lost, is when all contingencies are removed, right? And you get pretty much in the escrow, you're on into the escrow period. Home inspection's been figured out, at whether you negotiated back and forth, and that's been agreed upon by both parties. Financing, other than financing, and you can talk maybe a little bit about that as a contingency, approval, final approval, and some of the other things. But yeah, so once all contingencies, even like final approval, there's a line item on the purchase agreement that talks about to get a final approval from the loan officer, as far as, that yes, they've been through the underwriting process, they're good to go, and we're just waiting for final details to get to closing. When a buyer, to explain that, when I've seen buyers lose their earnest money, is when all contingencies are removed and they decide, you know what, we can't do it. We're gonna back out. So effectively the seller has taken their home off the market, right? And for at that time, quite a period of time. And so that's what earnest money does, is say that, hey, I'm going to hang in there, barring any other catastrophes or job loss or other things that are understandable and or justifiable, to maybe not move forward with the purchase agreement. But it really, when all contingencies are removed and they decide, nope, we're just not going to do it, that typically is when you're going to see that a buyer would forfeit their earnest money to a seller. So,
yep. Okay.
Yeah.
Okay. Yeah. And one more question. So when I issue that pre-approval, or I guess I issue that they are pre-approved, and they get lined up with you to go look at a house, what does it look like for these showings? How is MLS different from using an online app or anything like that? And what does that look like prior to the point, ending at the point that they have an offer accepted?
Yeah, no, I kind of probably skipped over that, but so that is a process. Once they are issued a pre-approval, then I step back in. And really we sit down and go through wants and needs, right? And now we know their price range and what they're willing to pay and they can pay, and or afford. Now it's really getting out there and finding the areas and setting up a search. So there's many different ways we can go about it. I know a lot of times realtors all day long, we're looking at properties, right? And so, but there is within the MLS that we can set up specific searches. And know that as the data is entered, you can always adjust it. So if you're not finding exactly the properties that you think you should be or whatever, it can always be adjusted. But a search is set up within our MLS, and then from that, you'll start to get as soon as possible or daily new properties as they start to hit the market, right? And that's directly from the MLS. And the great part about that is that this last couple of years, with such a fast-paced market, you really got to know. It almost got to the point where you really got to be on top of it. And there's different times when really should be out looking. Especially one tip or trick really is during the holidays. A lot of people stop and they enjoy their family, which, hey, they should. But for people that are out looking during the holidays, right? Those are the people that when you're out there looking, you've got you've got less competition. Two, if people are out there on holidays or whatever, that they're serious, right? And so when properties do come available, A lot of times what it looked like very much this summer is that a property would either hit like a Wednesday or Thursday, maybe even a Friday, having potentially sometimes would have an open house on Saturday or Sunday. And by Sunday night, the sellers are always already reviewing offers to accept or to move forward with a certain offer. That's what it looked like, and multiple offers. So some tips and easy for me to say, right? Tips and tricks of getting out there, going during the week, and if you can at night and different things. So kind of trying to do what everybody else isn't, is really kind of important to be there, to be able to, for one, to look at the house and to be able to go through it and have a little bit of time to be able to put together an offer and get it over to the seller. So yeah, that's kind of what it's looked like this summer. It hasn't always looked like that. Usually you would have enough time to be able to, schedule showing. Once you get an email from an agent, you'd go ahead and look through them. And then from there, you turn around and say, hey, yeah, I'd like to look at this property. I'd like to, either by sending them the MLS or the address, and, just however you effectively communicate back and forth, whether it be text or email or phone call. I want to see this, and this property. And it's typically more effective to try and go look at multiple properties at one time versus just look at one or the other. Everybody's got their own technique, but if you're able to, it's helpful to be able to look at multiples and kind of look at more than just one, I guess, unless it's absolutely what it looks like. It looks like a property you're absolutely in love with, and you go right away. So those are just some helpful hints, I guess, or inside tips of what's been going on in the market. Hopefully that helps. What that looks like and what you need to do when you do see those properties come across, and when you do get those emails, and if you're capable of going that same day or the very next day or the next, what have you. I know everybody's got to work, but it is vitally important to get out and take a look and then go from there. So yeah.
Well, beautiful. And we'll leave it at this point. You have an offer accepted on a property, and next episode we'll go through what it looks like from that point on. Scott, do you have anything you'd want to add to the end of this episode?
Yeah, and that's a vital point, right? Is getting the offer accepted. That's been the hard part. And I think what's happened too is don't get frustrated. Try not to get frustrated. It's very, over the last couple of years, it has been frustrating for a lot of buyers because I've written as many as 9 and 10 different offers for one client before we did finally get an offer accepted. So with the inventory where it's at and kind of the way the market is, looking, especially right now, talking about that, some of the different times of the year of really when it's almost better or easier to, or you got a better chance of getting your offers accepted, are different time, after school, is back in, and times like now when you don't have as many buyers and you do finally get your offer accepted. That's a great thing, but just know that it's been pretty typical for buyers to have to write multiple offers, and they don't always get that one home. It's writing one offer and getting one home is not the norm nowadays.
Yeah.
The
one and done is pretty rare.
Rare.
And on my end, kind of the same thing. Just hold your head up and keep trying. I've had some clients go through 20 homes before they found the right one, but it usually ends up, not the cliche thing, but it usually ends up working out for them. When they finally land the one they want. But
it does definitely. But have a little thick skin and knowing that, what's your expectation going in. Having the right expectation, I think, really helps. Because I've sometimes you get buyers that just think that it's not going to take a little bit of work or effort or diligence and persistence, but It definitely does. But it's worth it. It absolutely, the road to home ownership is worth it. So
Yep.
hopefully people like this, they can smash the like button, but
There we go.
to help get them a home, so.
Yeah. Well, beautiful. Well, yeah, if you found this content helpful, Scott just talked about it, but give us a like, share this, and stay tuned for the next episodes. But thanks for watching and listening to the Evolution Real Estate Podcast, where the evolution never stops.